Hello there, Maverick Currency Traders. This is Rob Reinhold. It is nice to be here. September 27th. Boy, September is almost in the books, and that will lead us into the fourth quarter of the year. Cannot believe this year is 3/4 over. So let's jump into it. In this session, as always, we're going to look through what happened today. We're going to break down all the numbers. Then we're going to take a look at the current market and see where is the relative strength and weakness. And then, as always, we are always looking for trading setups based on that analysis of where the market is right here, right now. We have a saying at Maverick: trade the market in front of you. Not the market you want it to be, not the market you think it should be. Trade the market that's in front of you, and that's exactly what we're going to do in this session.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's start off with where we were yesterday. This was Ankit's breakdown of the markets, and we had the European currencies were the weak ones. And the dollar was looking strong, Bitcoin Cash was looking strong, and then we had the rest of the stuff in the middle. My favorite trade for the week has been Canadian dollar. I've already traded it once this week. I am looking to trade it again for the rest of the week. It's on the top of my list, but until it starts looking better, it's got to be just one that's on the shelf. It did actually look better today. CAD was the best performing currency on Wednesday. So let's really break down what happened today, and let's start off with the news. U.S. bonds have been the big story, and one of the big stories has been that the U.S. bond has been moving higher and higher and higher. We're now up to 4.6% on the U.S. 10-year bond, and what that does is that puts a lot of pressure on stocks. We've seen a big fall lately, about a 5% drop in the S&P over the past 2 weeks, and it's really been on the backs of this higher yield in U.S. bonds. Today, the stock market was under pressure again. It opened up in a good mood and selling came in. And at one point, markets were down significantly. At the end of the day, they did recover. We're going to take a look at a chart. We do have a hammer candle on our daily charts, but that means nothing without the confirmation after. We'll take a look at all that in the charts. If we take a look at the spot Forex performance, you can see the CAD was the best currency. We had CAD at the top of our list, followed by dollar. CAD and dollar have been the better performing currencies this week. And what we had on our poorly performing currencies this week were the European currencies. So you can see that 2 out of the 3 were down. The pound was slightly up today, but Swiss franc and euro continue to be the weak ones to look for. The Aussie was the weakest one. We have liked the Kiwi much better on the long side than the Aussie. And the relative strength actually shows that that is still the right call. Kiwi over Aussie here in Forex. Let's take a look at the broad markets. Take a look at that S&P and the world index basically flat for the day. We'll take a look at a chart and you'll see that at one point these were down substantially. They crawled all the way back up to flat. Cryptos as a basket had an up day, but guess what? We'll take a look at the cryptos. This was all Bitcoin Cash. Outside of that, cryptos were totally flat today. Look at the big move higher in oil, up 3.5%, and the big move down in gold. Now, this is surprising because there is a negative correlation between dollar and gold. When you see gold down 1.4%, you would think that the dollar had a much better day than it did. It did not. But dollar's still looking good. And here you can see cryptos. Look at how flat everything was except for Bitcoin Cash. We have not liked the cryptos for a while, and we absolutely, at this point, hate the cryptos because look, there's no moves. There's no moves going on. There's no momentum there. If you are a directional trader, which we are in crypto and Forex, you have to find the things that are moving. These will move some point in the future. We know that. Markets are cyclical, but right now, don't even bother your time. It's not worth it. So let's look at the charts here. We are at a solid -2, almost ready to go to a -3 on this market. But I want to take a look at this chart because what we see here, we really started to get some big momentum after the Fed meeting. This was the day of the Fed meeting, and you can see we just kept moving down, down, down. We've had one up day in there, but that was erased very quickly. Take a look at today's candle. Today's candle, you do have a long lower shadow. It is still a red candle. We've had a lot of pain and suffering here in the stock market. These kind of candles are a little bit of like exhaustion candles. It's telling you that, okay, there's been a lot of selling and it just takes a little bit of short covering or a little bit of buying to pop these up. We don't know yet if this is the bottom of this run. We could have more. The way we will know is if we get a green candle tomorrow. If we get a green candle tomorrow, I think you can say that that was probably a short-term bottom. We probably rally back up to this resistance line and start our next leg lower. We've talked about how September 1st to October 15th is the weakest 6 months of the entire year, and here we are. October 15th is going to be right about here on a chart. So again, this is where we typically see the lows. We saw the lows last year right at this point. Who knows what will happen this year, but everything is telling you to be short in equities, and we have these moving averages starting to move down. We're going to go to a -3 here pretty soon on our overall score. So equities are saying we are going lower, but as I pointed out, this candle today says, okay, we might get some short-term relief. But really, if we do, you want to be short. If it bounces up, you want to get short. If it goes sideways, you want to get short. If it goes lower, you want to get short. I think you get my point. You want to be short here in equities, at least until we get a major bottom. And likely around the 15th, I don't know. It might come before, it might come after, it might never come. But that is what we're looking for. So we think we've got like 2 weeks of negativity here in the markets. This weekend, the U.S. is likely to go into a government shutdown. In previous government shutdowns, the market hasn't done that well either. Now, granted, most of the selling in the past has come before the government shuts down. I think the average loss was about 8% before the government shut down. But then once the government shuts down, the market goes down, I think on average, another 2% lower than that. So we think the intensity, all the intensity is right here before a government shutdown. If we do get the shutdown, we still think it heads lower, but probably not at the same intensity. As I said, it fits really nice within this 6-week period of September to October 15th. After that, likely the government shutdown will be figured out. Once that's figured out, we're very highly to get a pretty good market rally. But until then, we are bearish equities. Here we have the calendar for the rest of the week. As you can see, we've got some minor news. We've got some CPIs out of Germany and Spain. That's not really going to move the market much. Canadian GDP is probably the big one, along with U.S. core PCE price index on Friday. So really, it isn't until Friday morning that I see a report that is really going to make a difference. We do have Chinese manufacturing Friday night. We will be talking about that at the beginning of next week, because that will be something that moves the market. So over the weekend, I want everyone to at least check out what the number is so you can come ready to work next week, knowing if this number was disappointing and likely to put some more pressure on the market. So let's get into our currency analysis and let's see what has actually moved today. Looking at our velocity score, we already know what hasn't moved. We know that the cryptos, we already know Bitcoin Cash was strong, it's still strong, but all the other cryptos haven't moved. We also know that the Kiwi didn't go anywhere today. We know that the yen didn't go anywhere today. Let's check in on the other currencies and we'll see how this velocity scoreboard has changed. Let's check in first on dollar. Now, dollar was at a +3, and you can see this dollar looks fantastic. I'm going to go to a velocity score. Everything looks up on the dollar. Everything looks up. We've got these breakouts. We've got some clear areas. Look, this is a +3. So dollar still looks good. So if dollar is going to stay at that +3, let's check in on the CAD. CAD is also looking great. We had a little pause here, but then we broke out of this little high base, and you can see the CAD is ready to go as well. So CAD is going to actually strengthen back up to a +3. We like dollar and CAD going into this. Let's check in on Aussie. As you can see, Aussie was trying to get above this resistance area and just couldn't. We are range bound at best, so we've got to put We got to put the Aussie in basically a zero situation here. And let's check in on pound, euro, and Swiss franc. So here's the pound. The pound was the weakest currency over the last 2 weeks. We said it's still got momentum, but it's likely extended. And it likely needs a bounce or a base before it's shortable again. So you can see here, this is this week. We've had 1, 2, 3, 4 days of just totally sideways price action, which is what we wanted. Now remember, the weakest stuff bases. The weakest and the strongest stuff base. So this pound basket here, we fell, and when it finally got to a bottom, look, it didn't bounce. It didn't rally. What did it do? It based. The weakest stuff bases. So pound is absolutely going to be a great short again, but the only question is when. At this point, right here, right now, it is sideways. So we got to move the pound to a zero. Pound is not ready to be shorted yet. Let's check in on euro and Swiss franc. And here we see the momentum is there. Right here, right now, we are seeing selling. We are seeing lots and lots of selling here on these currencies. So we want to be short. Euro looks like a great short here, breaking down below some of these support levels. So euro looks ready to go here. And let's check in on Swiss franc. Swiss franc looks even weaker. So the big question is, Swiss franc has had a run. So what we like to do is we like to get short off of bases and rallies. This has had this big move down. We are likely closer to the bottom on this one than on euro, where euro has consolidated for about 2 days, and now we're falling. So euro is our favorite currency. The big question is, what is the better currency between dollar and CAD? So how do we answer that question? Dollar and CAD were both a +3. So we pair up dollar CAD and say, which one would we rather buy? And you can see here, we've had the dollar has been slightly stronger than the CAD. Right here, right now, we're getting a little pullback, but I'm going to go with dollar. So very easy to know what we're going to be trading. Over the past 24 hours, we've had the dollar and the CAD strengthen. So the pound is no longer in a shortable position, and we've only had one currency, the Aussie, slightly weaken. So look at this. It's very clear what we are going to be looking for. Dollar a CAD against euro and Swiss franc, and we already looked to see that dollar was the strongest and euro was the weakest. So that leads us to some currency pairs. Again, I'm going to take a look at euro dollar. You could look at dollar Swiss franc. You could look at CAD Swiss franc, but I'm really going to be focusing here on euro dollar. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Here is Euro US dollar on a daily chart. Now look, you can see that it is really starting to get even uglier. It's been in a downtrend, but now we're really starting to gather momentum. We are at this support point, but we have broken below that support point. Again, this has a ton of momentum to the downside, and whenever something has a ton of momentum to the downside, it's going to stay that way, and the more intense the selling gets, the bigger the bounce is likely to be. So we have to be realistic on where we are in the waves. We have to understand that we are maybe in the 7th or 8th inning of this euro dollar short. So I want everyone to be fully aware of where we are in the chart pattern. We are in the, look, we could be at the 9th inning and just not know it. We don't know how long this down move is going to go, but we have to know that it is close to the end. That being said, We're not looking to buy this. We don't buy these crap bounces. Look at this. You don't buy these crap bounces. They're crap bounces. We're looking to be short. But if we get short here, we know that it has to be fairly short term. We have to be a lot tighter on this because we know we are, again, in the 7th, 8th, 9th inning of this move to the downside. So the big question is timing. Timing. Where is the timing? We just got this breakdown, and take a look here. Over the last 5 hours, we have seen sideways price action. So that's what we get. We get sideways price action, a fall. Sideways price action, a fall. This looks like it's going to go sideways some more. We are literally right at the beginning of the Asian session. You typically get more sideways stuff in the Asian session. So I'm looking at this trade thinking, okay, it looks like this is going to go sideways for the next couple hours. We just need to get ready for the entry. And I'm looking at this entry, boy, 104.87 was the low on this low candle here. That's going to be the entry here. 104.87, so let's say 104.85. 104.85 for me is an entry for a new short here. And I can stick that out now. Again, follow your stops. Make sure you are putting your stops in the right place. Tie them again to a moving average, to ATR, whatever it is you do on your stops, tie them to those. But I think right here, right now, it's more likely to go sideways for the next at least 3, 4, 5 hours. After that, I think you want to start looking to be short going into the European session on euro dollar. That is really the only trade I'm looking at. I do think Swiss franc is a little extended. That's why I'm looking at euro. It already had its big move. So let's move on to euro and check it out. You could look at euro against CAD, but I'm going to guess it's going to look very similar to euro dollar. And you can see here, same thing. We've had a big fall. We're starting to moderate. We're likely to just stay in this area until it gets enough momentum back to make another plunge. So this trade will work fine as well. We do have one minor report tonight. This is not a major report, but since there's nothing else on the calendar, sometimes these reports are more important. The one thing that's on the calendar tonight, Australia retail sales. So if you are trading the Aussie, be aware of that. If you're not trading the Aussie, you can completely ignore it. Let's talk about where we are in the market. We're not getting big moves. All the other markets are moving very large. Bond market is moving big. Equity markets are moving big. Forex just isn't moving big. Now, I know we can complain about it, but I have to remind you, back in July, all of the other markets weren't moving that much, and Forex was amazing. It was amazing. July, August was amazing, and equities weren't really moving all that much at the time. We're now at a point where those other markets are moving more, so you have to expect more moderate moves. If you're looking to make 1%, 2%, 3% in a Forex move, it's not happening right now. You really need to be looking for more around the 0.5% to 1% is the target that you're going to be looking for. Just understand that. It's an okay trading environment. It's not a great trading environment. So we want to make less trades in okay trading environments, more trades in great trading environments. This is where you try to do less trading and ask your trades to do a little less than you would in a better market condition. Well, that is it for me. That is the currency recap. Happy trading, everyone.